The world is on the brink of a depression. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Still working through my morning stein of coffee. The rain's eased up a little bit and I thought we'd have a look at this news.com.au article discussing, well, the potential of the world being on the verge of an economic depression. And James starts by discussing just the record highs that we're seeing in the NASDAQ and in the Australian stock market. We'll just jump over to trading economics and I'll bring up the ASX 200 so we can see, I mean, we're over 6,000 again. We're over 6,000 again. And we're in a recession. We're in a recession. But, you know, do these markets reflect realities? What the? Well, there you go. The NASDAQ over 9,000, an all-time high. Well, that's what money printing does, isn't it? That's what QE does. So, I haven't been following that closely. I didn't realize it was at an all-time high. Wow, over 9,000. What do you reckon, guys? What do you think that will lead to? Because the fundamentals haven't changed. I mean, Australian banks, they've shot up too, and they've put so much money aside for debt, for failure. Well, I'm still sorry. I'm a bit taken aback. I haven't been following the market that closely the last few days, and I didn't realize the NASDAQ hit over 9. Is that a mistake, guys? Is that a mistake in trading economics? It has to be, couldn't it? It can't be at 9,000. I guess that's money printing. Wow. So, the world's largest economy is on the brink, is burning, and the global death tally from the pandemic continues to rise, but investors are piling into the stock markets. In New York, retail giants were boarding up their glitzy stores last week, bracing for carnage from the riots spurred by the killing of George Floyd at the hands of a police officer. But nearby Wall Street appears unaffected by the chaos, where stock markets have surged to within record levels as the United States added 2.5 million jobs in May after slipping more than 20 million. I mean, that can't be right, that 9,000. I'm just going to check. I'm going to check just another source. You know, we'll jump here to... Well, news.com doesn't have it. We'll go to TradingView. Has it really climbed that much? No. Yep. Okay. Okay. Well, money printer go brewer, everyone. Let's see if it's mentioned in here. So, but Wall Street appears unaffected by the chaos when stock markets have surged to within record levels as the United States added 2.5 million jobs in May after stripping more than 20 million in April. Now, here's the thing with regards to that job data. Haven't they adjusted a whole lot of matrices and they've really played with the figures? This was viewed by many as a sign the country had witnessed the worst of the pandemic-induced recession and investors scrambled back into the indices. The NASDAQ composite has wiped out all of the losses inflicted during the pandemic and set a new record high overnight, while the broader S&P 500 climbed to within a record high. This is despite the World Bank forecasting further financial pain, saying today the global economy is on the verge of plunging into its deepest recession since World War II. I'd say a depression. Australian shares have followed as the ASX trades more than 2.6% higher today, and while stocks have now reached the heights to earn the bull market label, experts warn buyers may have bolted too soon. Well, they're anticipating. Well, you've got manipulation by the Fed into the market, but they're anticipating a recovery. And you saw what happened with all the retail investors piling into Hertz. I don't think you can say there is a fundamental justification for stock markets rallying this aggressive this soon, he told news.com.au. There's certainly an element where the economic outlook looks better than it did a couple of weeks ago, citing the positive jobs data out of the US from the end of last week. But if you look at price action itself, market valuations are at multi-decade highs. And we're seeing certain stocks and segments of the market that are very high risk, exhibiting behavior which is very much divorced from fundamentals. At the end of the day, this is a central bank proven rally where, yes, there is a bit of optimism in the market, but with all of this stimulus, liquidity in financial markets, it's driving stock prices higher. Mr. Rhoda said fear of missing out is kicking in to buy shares in conditions he described as parabolic as investors chase risk and return. This concern is shared by critics from the US who say investors may be setting themselves up for disappointment as the potential for a second wave of infections looms large, or the fact that these businesses are insanely overvalued. That they're insanely overvalued because they're not going to turn a profit. Financial data will come out in another I guess. I mean, that's just... I really am a bit shocked at how much it's climbed. It all starts with the virus itself, and there hasn't been any immediate rise in infections, told Tom Martin, Senior Portfolio Manager of Global Investments, who still remains far from giving the all-clear to buyers. Well, the US is pretty much still pretty high. Brazil's off the charts. They've stopped reporting data. Yeah, it's a mixed bag around the world, everyone. There's a lot of risk that businesses and economies don't recover fast. He said, when money starts running out in July, are we enough on a path of getting people employed and businesses open? So the deepest recession since World War II. The World Bank has warned the pandemic will see the global economy plunge into its deepest recession since World War II, forcing many millions into extreme poverty, according to the latest economic outlook. Global output will shrink by 5.2% in 2020. Economic activity among advanced economies is expected to shrink 7%, and emerging economies will contract by 2.5%, the steepest fall in 60 years. This is a direct result of the pandemic, which just saw a record new high in daily cases. The pandemic has delivered an enormous global shock, leading to steep recessions in many countries, the report said. The baseline forecast envisions a 5.2% contraction in global GDP in 2020, the deepest global recession in decades. Per capita income in most emerging and developing economies will shrink this year. The pandemic highlights the urgent need for policy action to cushion its consequences, protect vulnerable populations, and improve countries' capacities to cope with similar future events. The grim forecast comes as Australia enters its first recession in close to 3 decades. The Reserve Bank predicts our economy will contract by 6% in 2020, with World Bank economists saying that under a worst-case scenario, global GDP could shrink by almost 8%. So there you have it, everyone. Predictions of a recession, the worst since World War II. And while this is happening, countries are going into recession. Businesses are refusing to abide by contracts, stopping to pay rent. Unemployment data is being released in the US that's questionable at best. And the stock market is just going parabolic. All the while, the Fed is printing so much money, it is insane. What do you think's going to happen, everyone? What do you think's going to happen? It just seems crazy. We definitely are living in a clown world, guys. We definitely are. Do you think the global economy, well, do you think what we're seeing here is that, well, it's more than a dead cat bounce, isn't it? It's gone crazy. And if you look at just how much money printing is going, do you think that will flood into gold or silver? It's really been, quite restrained. And if we look at, Australia's at 69 cents, the US dollar's going down, other things. The Nikkei is at 23,000. The Dow Jones, let's have a look at that, at 27,000. There you go. Hasn't quite shot up as much. So everything's just getting flooded into the NASDAQ, guys. And how many of that is just in the big tech companies? So as always, please let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and you want to support the work we do here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays. You can use Gold Pass from the Perth Mint or support us via PayPal. Take care, everyone. Have a great day, and I'll see you in the next episode.